Thank you so much. Good evening, everyone. I hope y'all at some point in time have had, for you guys on the East Coast, have had some opportunity to maybe get you something to eat for dinner. And as it was introduced, my name is Pat Barham. I'm with Trade-A-Thon. I am in that room with a friend of mine that we've been working together for probably close to 10 years now, a guy named Michael Sullivan. And a little bit about myself is introduced. I started as an institutional grain trader. And so I'm coming at this from a little bit different perspective than most people. Most people save up for a long time. They open an account and they start trading. Well, I did that, but on top of that, when I came out of the agricultural industry, I was encouraged. A good friend of mine was running a brokerage firm, and I had a massive amount of contacts and people that I'd met over the few years in the agricultural industry that dealt in futures. I got tired of traveling and was talking to him because he is a close friend of mine. And he said, why don't you come up and look at what I do every day? I knew what he was doing, but I just never knew how he was working. And this was in the days when you'd pick up a telephone, you'd call in orders, and you didn't have CNBC running in the background. You were just getting news off of a direct feed from AT&T and a lot of different things like that you'd look back now and go, man, that is archaic. But believe it or not, 20 years ago, and I started trading over 30 years ago, back when I was only about 5 years old. But no, really, it's back when I got out of school and started trading and worked on other than trading for just a couple of years. And then I got started and I traded with other people's money. Now, if you think you have stress when you are trading your own account, there is another level that you can go to, which is trading someone else's account. And not only that, trading several hundred people's other account. Because you've got things, that's why I say that I've traded just about everything. When you're a commercial grain trader, I've traded corn, soybeans, wheat, soybean meal, soybean oil, hogs, cattle, gold, silver, energy markets, options, you name it. And I've traded just about a little bit of everything. Now, when I first got started, what we're doing right now did not exist. A webinar, it just wasn't something that worked. Matter of fact, I guess this has probably been about probably close to 10 years ago, back when Skype was working, and you could share a computer screen on Skype. I started doing online webinars or online mentorships with people, putting them on a speakerphone, getting multiple people on a speakerphone and showing them off through Skype the different ways that I could trade, doing mentorships for that long online. And now, off of the trading aspect of everything, I got started with a guy showing me, sitting me down side by side, showing me some of the trades that were seasonal trades in the market at the time. And at the time, corn, soybeans, wheat, and I traded, a ton of cotton. And those guys shared some of their trading knowledge with me, some of their trading wisdom. And that's the way I learned really the institutional side of the market. And then along the way, I also learned how people trade and want to trade when they were calling their own shots. How the mistakes, I saw the mistakes that people made with small accounts and some with very large size accounts. hundreds of thousands of dollars making decisions on what to do. So I've traded a lot of different ways, and that's helped me develop these things. And the holiday trade came about by these guys who started showing me different things in the market and in ways that I could trade in the market on a seasonal basis that would help. Now, what we're going to look at today is my holiday trade, and of course we've got to cover the warnings, and basically this is it. If you don't have the money to be trading, you don't need to be trading. If you can't afford to lose what you're trading with, don't trade. And one of the first things that we covered, these guys shared with me, was kind of a myth at the time that I kept, and this has been published in several different things. It's called the voice of the tomb. Now, this voice of the tomb was supposedly a myth, but a lot of people say that it was a real speculator in Chicago, and this guy traded and made millions of dollars back almost 100 years ago. Well, he had amassed this fortune, and his wife died, and after she died, he traded and he took care of his children and raised them. The only problem was the kids were real lazy. And by them being real lazy, they thought they were going to just inherit everything their father had earned. Well, he knew that being lazy was not a way to just exist in this world. So he gave away all his money to charity when he died. But what he left them was, in the will, was a list of the dates when he would buy and sell the markets that he made his money off of. And he told the kids, if you will strictly stick to this advice and these dates, that they would be able to amass a fortune like he did, but they will have made it on their own instead of just having it drop in their laps. Well, I've always had that, and I've always looked at these dates, and believe it or not, these dates are viable, some even still today. Is it a viable trade setup? Yes, it is. If you trade in long-term trading. What's changed over the years? There's a lot that's changed over the years, and you have to look at what the driving force is behind these dates. Now, some of you guys, if not all of you, have y'all ever seen this movie? That's what I was wanting to find. How many of you guys have seen that movie? Yeah, multiple times. Yeah, yeah. Y'all remember what? Yeah, there you go. There's a lot of people that have seen it. Now, let me ask you a question. Do y'all recall what this movie was centered around, about what they were going to trade and what was going to be the trigger for this trade? Y'all remember? OJ futures, that's right. Yeah, and a crop report, absolutely right. So I got y'all on board with that. Now, what is a crop report? That's one of the questions that you need to ask yourself. When are these reports released? Now, if you're going to trade in the grain markets, in the agricultural markets, one of the things that you need to know is when these reports are released. Now, I trade the ES and the YM, the E-mini S&P and the E-mini Dow an awful lot. Is much or more right now, more than I do the grain markets. So trading the E-mini S&P, there's a report you need to know there also. It's the like FOMC day. You need to know that most reports come out about 9 o'clock in the morning, major releases, economic releases, between 9 and 9:30, like I think it was yesterday, we had a petroleum status report that was out where we had a build of over 10 million barrels of crude that drove the market down $3. Now, what's important? Now, if I'm sitting here trading, mindlessly trading crude, and this petroleum status report came out yesterday, and I've got my stop $1 away thinking, man, I'm in the money and I'm doing well. And this report comes out and the market dives like it did yesterday and caught me by surprise. I'm going to be somewhat shocked, but then when I look back at it, I should be somewhat irritated with myself because I didn't know when that report came out. This is what's important. The information in the report, and I continue to say this almost every day, I don't care what's in the report. All I need to know is when it comes out, because I'm trading the flow of the market, not what the report is. I'm not a fundamental trader. I'm a technical trader, and I'm looking for chart patterns to develop, and I'm watching very closely the flow of the market and the volume. I think that's one of the key things for me to do. Now, give you an idea, there's seasonal trades that come up that are centered around crop reports, and some of them that just happen around holidays. Now, why did I call this webinar holiday for holiday trades? The reason is it's because a lot of times reports happen around holidays in the market, especially during the summer, like 4th of July or Memorial Day, things like that. Now, let me ask you this one. What commodity contract would you have a potential of making a pretty good return on right around St. Patrick's Day? Well, sounds like potatoes, but, and some people have said, well, barley, hops, different things. This commodity contract has been a winner 31 out of the last 40 years. That's a pretty good average. Average holding period's been about 23 days. And even when we had the 2008 bullish commodity run for almost the entire commodity market, when everything was making some huge moves to the upside, this seasonal tendency worked with a potential profit of about $1,730. This year's move here in 2015, it's been over $1,580, and it's not on the exact date that I'm doing these at the holidays, but it's when the seasonals start. And the move this year that was given before St. Patrick's Day, which was on March 17th, this commodity has moved about $2,690 as of yesterday, since right, I think, the first week of March, and it's still a viable trade. So this is going to put in 32 out of 41 years now. Now, go back and look at it, and you can check me out on it. Anybody have any idea what this was? Beans, potatoes. When was the last time you looked at cocoa? Some people never. But this was a seasonal trade on one contract with a $2,600 move since the first part of March. Now, I'm going to cover a few more things in here that may help you. You can go, the monthly crop reports, you need to take a look, and I'll see if I can't get this and show you guys. Hopefully I don't blank anything out here. Give me just a second. Let's see if I can't pull up Internet Explorer. No, it's not letting me do it. Let me see if I've got it over here where I can pull it up. There we go. There we go. Good deal. It actually even works. The National Agricultural Statistics Service, which is an arm of the USDA, has a crop report calendar. And if you're going to trade in the grains, you need to have a copy of this calendar. Why? Because once you have a copy of this calendar, and I'll make a copy of it, and I'll put it down here in the chat window for you guys, if it'll let me do it. Right now it's not letting me do it. I might better not try to stress this out too much. So let's go in here to April. No, let's go to the end of March. And the reason is, on the 31st of March, we had a grains stocks report. What does that tell us? That tells us it's basically what type of inventory of grains we have left at the end, that we're going to have left at the end of the year. Now, it will tell us we've had a buildup since March of 2014 of 11% in corn in storage. Soybeans was up 34%. That's a big increase. If you go back and look at soybean prices, you would see that we've taken a pretty good hit in soybeans. Now, and I'll show you a few more things in here that may get your attention. Now, all wheat stocks were up 6%. Now, as we look at this, do I really care when this report comes out what these stocks were? No, I really don't care. I could, in all honesty, I could give a flip. And the reason? Because these reports, these stocks, don't mean anything unless people trade it bullish or bearish. What I'm wanting to do is find out, is this, what direction, what pattern is going on in the market. But it's important to know when the reports come out. And when you have this report, and you can type it in and keep it, USDA crop reports, and go to that, and it would give you this page right here that you guys would be able to go in and track that and maybe mark on your calendars when these reports come out. Now, the major reports are going to come out at, and let me find the next one, crop production right here, which is our next major report. And lo and behold, this crop production report is going to come out tomorrow. No, today. It came out today. Then we have the historical production and the track records tomorrow. Now, what does the crop production do? This will tell us today, and if you look back in the market, and I was gone from about noon today because I had a friend that passed away, so I had to clear out my positions yesterday, and I'm getting my days mixed up. That's why I said tomorrow. This is what we were looking at. Now, who cares about orange production? Well, this was what that Trading Places was centered on. But the key component in here that we start looking at when we get down to all of this, which will start coming up, is this little area right here. What our projected acres of being planted will be, and these crop reports starting next in this month, later on this month, the different type reports we get will start picking up more and more importance as we go along. Right now, the report is not that leaning this month, because this is when we first started, and these reports are not that relevant to the market right now. But being that you know that there was a report, if I can, let me see if I can get this moved over. Let me show you. So a crop report came out. One of the biggest ones that had an effect on it was wheat, because wheat's growing in the field right now. What happened? you look at wheat on a, let's look at wheat on a 1 minute chart. Before it came out at noon, look at the move, 526 to 518 in 7 minutes. Now, do you think that if you know that report's coming out, how do you trade that? Now, I'm going to be doing a webinar on the 22nd of this month, and I will teach you some of the things that I've picked up in trading this report. Now, this is like, if you're used to trading the E-mini S&P, this is like a 8-handle move in the E-mini S&P, because in the agricultural side of the market, the dollar equivalent to a 1 tick is $12.50. The same thing as 1 tick in the E-mini S&P. So an 8-cent move in that length of time, a $400 move in 7 minutes. And almost, and I can tell you, when I trade these reports, I'm looking for a snapback in here. And one of the key areas, I'm looking for anywhere between a 38 and a 62% retracement. Now, there's some keys that goes along with it that I teach in these webinars about the holiday trades, about whether you can get in them on a long-term basis, whether it would be advantageous for you to get in these trades at a time prior to the report, ways to trade the reports prior to it coming out, leading up to the reports, and then also in the days preceding the post-report that you get coming out and how to trade these reports. And I'm going to cover that on the 22nd when I put on this webinar. Now, let me get this back. I can get my chart back here. Yeah, there we go. Be patient, guys. I'm getting it back up here. There we go. Now, last year on June the 30th, we had a crop report that came out. We had a 74-cent move in 1 day. That's a pretty hefty move, over a $3,500 move in just a short period of time after this crop report came out. How do you trade it? That's what I'm teaching people. The importance of knowing when that report comes out, what day, what time, because if you're going to trade the grain markets, it's just part that you've got to know when it comes out. Or either you're going to chance risking it. If you're going to be a professional trader, you want to know these things that come out. Now, over the years, what's changed in the markets over the 30 years that I've trading? Now, back then when I started, they didn't have stuff like this. What I came out of the agricultural side of it, like I mentioned, and I had worked with a company up in right outside of Springfield, Illinois, in Auburn, Illinois, called Dickey John Corporation. And they were working on instrumentation for all types of equipment for tractors. One of the big things was a planter, and it was a monitor that would tell a farmer as he was pulling his planter down a field if it got stopped up with mud. Now, what would happen? If it got stopped up with mud, it would quit planting and you'd have bare spots in the field. Well, they had developed this, and it was strange because the guy who started the company was a farmer who had one eye put out. And when a farmer would drive down the field, they would turn around and look back at the equipment and try to tell when something was wrong. Well, he couldn't turn around with one eye and see what was going on behind him and then drive a straight line going down the field. He was somewhat mechanically inclined, so he made a monitor that would do this, and that's the way the company got started. The monitor would indicate with a flashing light if seed was going in the ground. Well, partly because of that, people now can drive something like this down a field and be able to keep track of it. And we worked on equipment like this. I worked in the in the part of this where I went all over the country, and I was working with their research and development, and we did all types of instrumentation in there that would help farmers be more productive. So things changed? Yeah, things changed. Now, what's that have to do with trading? Things change in trading also. Now, the Chicago Board of Trade, the one on the left was before 2008, and that's the way the pits looked. 2008, after 2008, that's what they began to look like. Now, after June of this year, you know what the corn pit's going to look like, guys? Any idea? It will cease to exist as we know it now. Electronic trading has taken over 95% of the trading now. It's all done electronic. So what are we looking at? There is a new pit, and what is it? It's right here. This is the new pit. Whether it's the E-mini S&P like this, or whether it's the YM like this. And there's one little thing that has happened when we went to electronic trading that changed the world, that took the advantage away from the floor trader and gave it, put everybody on an even playing field for the very first time. And it's this little chart right here. In that little chart, do y'all know what that is? Any takers? It's showing right here. It's volume. Do you know how to read volume? That's the major change that has taken place with electronic trading. We can now see what volume is rolling through the market. 30 years ago, the only way we could tell what the volume was to have my floor broker, when I talk to him, have him call me and let me know if there was good volume in the pits. Could I tell exactly what it was? No, I couldn't tell what it was. But he would let me know what traders were in the pit. Now, if I'm a trader in the pit, I would look across the pit and be able to see what was going on the other side or right beside me. I knew in those days when there was a guy trading called Rich Dennis that would come in. Y'all may have read his book, Turtle Traders. But you would get the traders would call and say, hey, Dennis is in pit. He's buying soybeans. He's selling soybeans, whatever he's doing. And he's buying a lot of them. Now, we knew what he was doing because it all had to be open outcry. Now it's done, it could be done in a screen sitting in an airport or on the beach. How do you follow it? You've got to be a student of that little chart right there, which is volume. This is the new pit. Now, there are a couple of other things that you can use with this market, with this right here, when you're looking at volume and time and sales, and you're looking at charts. I look at point and figure charts. I read all of these. I look at a 50 tick chart. I look at all types of charts in here. I'm looking at tick charts. I'm looking at volume spread. I'm looking at the trend. I'm looking at all these things, and my charts are set up where I can fly through them, and when something changes, I know what's going on. Now, what's important about that? This is important. You've got to be able, that's the pit. You've got to know, now that you've got that advantage, use it to your advantage. Use it as an edge in the market. Now, as I was speaking, there's some other ways that you can get an idea to know what's going on in the market. How many of you guys have heard of the Commitment of Traders report? I'm not going to wait for y'all to answer, but do you know when these reports are released? Do you know what the information is that you need to know in there? Now, it tells us and it gives us an idea about volatility. How do you trade Commitment of Traders reports? more than anything, it's giving you information. It comes out, we get that information late in the week, and it's not something that just jumps up and moves the market. What it usually does is it gives us an idea of what to be doing. And so we're trading volatility. That's what I want to know. I want to know when the volatility is coming in and how I can take advantage of it. This was a move in soybeans that we had last year, and in 4 days we had a $4,700 move. Now, how do you trade it? You can get in there and trade this report in a lot of different ways, but first of all, you need to really know who you're trading against and what those guys are doing, because there are two sides of trading. One is hedging and one is speculating. Now, I was in the hedging side for a long time, and I learned to trade. What I was doing is just covering people's rear, because if I'm a producer or if I'm a farmer and I'm growing 10,000 acres of corn, I've got a lot of corn that I'm long just as long as I would be if I had 10,000 acres worth of corn in the futures market in the Chicago Board of Trade. So what do? Every time corn goes up a penny, everything that I've got, the value of that crop I'm growing fluctuates. If I'm owning crude oil, every time crude goes up or down, my assets fluctuate, just as if I had thousands of shares of Apple. So these guys had to protect it. What they were in the business of doing was growing the crop, not so much as trading it. So we protected it. Now, the speculative side, that's where we come in. We need to know what's going on with the hedging side, but wouldn't it be nice to know what's going on in the speculative side? Well, if you ever looked at a commitment of traders report, you can know that. How can you know it? By looking at these, and I'll fly through these in a hurry. I don't know how much time I've got. Raleigh, if you put that in there, how long I can go. I think it's till 6. The managed money, and this was June of last year, 2014, at 37 minutes. Good deal. Okay, I see it up there in the projector. Okay, the short positions, 70,000 contracts when you add them all together. The long positions were 150,000 contracts. Now, the shorts were increasing. What does that tell you? There may be something going on. The speculators may be doing something in here. And what were they doing? If you go back in and look at charts last year, in June of 2014, let's take a look at it and see what was going on. And we can go in there, if I can find, if I can get my charts. Here we go. Now let's take a look. June of 2014. The shorts were increasing their positions. June 2014. My, oh my, here we go. 13, 12, 13, 14. The day of the report, what did it do? Came up. This was trading at, let's say, around 1250 area. Look at the move. Boom, boom, boom. Go in here. Let's go in a month later. July, 1 month. It's trading a low of 1085. That's a pretty sizable move. $10,000 move out of that right there. Can you trade that? Are you missing it? Because we're traders. If we're traders, does it really make any difference whether you're trading the E-mini S&P or the YM? What we're looking at are markets that have volatility. Now, I mentioned a holiday trade, so I might as well show you here. Look, does anybody know what holiday would fall right around the end of May? the 1st of June. I bet most of you would probably be able to figure out that blank spot right there was Memorial Day. What happened the day before Memorial Day? We put in, or 2 days before Memorial Day, we put in a high of the market at 1366 and a quarter. Look at this. We go through the summer, the end of the summer, and the low right here was 1037. Over a $15,000 move on one contract right here. Now, how do you trade it? That's what I concentrate on in our webinars. I try to teach people how to take advantage of these without it taking advantage of you. And that's pretty important. Now, the Commitment of Traders report helps. How does it help? It gives you an idea of what people are beginning to do. You can see here these changes off of this June 10th crop report of things that began to happen and how the shorts were beginning to increase in size. Now, you've also got crude oil that comes out with these reports. You've got several different commodities that are reported in this particular one, in the Commitment of Traders. It's one that the market is not moved by it because it's usually released after the close of the market. It is released after the close of the market, and you just need to know when this thing is coming out and give you a heads up on what managed money is doing, which is millions of dollars in the market. You want to find the smart, supposedly the smart money, and not get trading against it, but the easiest way is to trade with it. Now, seasonalities are based on historical trends, and it's been an accurate predictor of price movement for a long time. That's what that voice of the tomb is all about, was seasonalities based on historical trends. Now, as I said, we are not only that, we're in a season of change as we go along. And what is this season of change? It's an international market that has thrown a wrench into a lot of these dates. It's made things a lot different than it used to be, because back when I started, people were kind of snickering at Brazil growing soybeans. But when you look at it now, in South America, they produce as many soybeans as we do on a good year. Matter of fact, one of my real good friends that I've done a lot with in Memphis, Tennessee, wrote the first contract to sell the Soviet Union soybeans back in the 70s. He's a good friend of mine. And he sat down, that was with a place called Cook Industries, and he sat down with the Soviet Union, the person from the Soviet Union at a table and wrote out a contract on a napkin and started selling them shiploads of soybeans. And the market changed since then in a massive way. Why? Because with us exporting as much as we export, it's not going to go down the need for grain in the world. You can see here what China's net imports of grains were expected to be, how they surged in 2012 and 2013, where they came to a point where they become a net importer of not only soybeans, but barley and wheat and rice and corn, sorghum. They've done all of this. And what else? When you look at the global wheat supplies that we've got, what some of the projections are for the United States, where's all this wheat going to come from? We aren't making any more farmland. And this is pretty much indicative of the way prices went last year when the Soviet Union, a couple of years ago, when the Soviet Union had a really bad wheat crop. And we saw wheat go to $15 a bushel. Now, was that an opportunity for us? It was, but you needed to know what was going on. So we've got a new voice of the tomb that's around. And that voice of the tomb gives us that opportunity to trade in a way that would open up opportunities not only on our seasonal trades, but seasonal trades from overseas. Because right now, we're gearing up planting soybeans and corn as we speak. In the southern part of the United States, in Texas, in California, cotton's being planted. All these things are taking place now. So along with that knowledge, there needs to be an understanding of how all of this is going to work together for you to go in there and profit from it. So how do you do it? Let me go back to this slide to bring this over and show you. And I'm going to show you what you're looking at right here. I'm going to point out something that's going to seem so simple. You're going to be going, why didn't I ever do this? Well, it looks easy on this chart, but when you have a move from $9.26 to say $13, a $4 move, this move right here, all the way down, is a $20,000 move. And I venture to say that a lot of you guys didn't even know it existed. How many states are very dry right now? There's quite a few of them that are dry, which is affecting wheat prices a little bit, but it's expected that it's not going to affect our wheat crop enough to really drive prices up a whole lot. So off of the soybeans. Now, let me show you something, and don't think that I'm just spilling the beans and giving you all the information, because I'm going to give you some dates in here that are similar to the voice of the tomb. But you're going to see, well, what happened? Look, 4th of July, it escalated and began to move. In September, like I mentioned, then you've got Labor Day. In the agricultural market, those are three big holidays for us. And what happened? Well, that was just a fluke, wasn't it, Pat? Yeah, that was a fluke that happened back in make sure, 2014. Well, let's take a look back in September. Let's go back another year here. And I can show you all this because, you know, I'm not afraid to point this out, because I know that if you sign up for this webinar that I've got, I'm hoping to whet your appetite enough where I can get you in there, where I can help you make some pretty big bucks. Now, let's go back in here again. There's Memorial Day. There's my arrow. Right here. Look a couple of days before. Look at this move. Look at this move here. We get into a sideways move in here. Did we know what was going on? Yeah, I knew what was going on. And then we get in 4th of July. What happens? Is this a big move? Is this a tradable move? No, surely not. $10.24 from the low up to $10.92, about a 70-cent move. That's a pretty decent move in the market, $3,500. Because each dollar that the grains move is a $5,000 move. Well, that was just a fluke. That just happened. Oops. That just happened in here. And let me get that back. There we go. That was just a fluke, and that just happened. That was unusual. Oh man, look what happened. September, we come back in September 2013. Anybody have an idea what happened after that? That happened to be the high of that move after Labor Day. Now, What are different ways to trade it? That's what I will be teaching in the webinar that will be coming along. Well, that just, you're showing soybeans, you padded that. That's, you're just using it. That just was a once in a lifetime type example of something. I'm going to show you something because as I go on down through here, let me throw up Apple. Well, what does Apple have to do with the holiday trade and all these things? That's what I'll show you. Well, let's go back into December 25th. Apple. What happened with Apple? December 25th. Well, that's a freak there that's happened. Well, there's another holiday that came right. Anybody know what holiday it was around the 19th? I think this is Martin Luther King Day. What happened after that? Well, lo and behold, look at that. There are some moves there. Do you know what's coming on? Do you just pick out holidays and trade them? No, there's a way to make money off of these that you guys can go in, pre-knowledge of these things and know it. Here's another blank right here. What happened? We had a pretty decent run coming in here out of, this is this year, February the 16th. Well, does anybody know that we just had a 3-day holiday here in the United States? Yep. All right, let's go back in here. September. What happened here? This is Labor Day. What happened after Labor Day? Oh, there's a high right there. And what happened with Apple? Apple dropped from like this level was high 103.74, and it dropped down in 3 or 4 trading days to 96.14. How do you trade it? What's coming on? What are you following along so that you know some of these things? Well, these different reports, the different ways to trade them, and the different ways to just stay up with these. That's what we cover in our trading room at Trade-A-Thon.com. And I'm constantly talking about these, and I'm talking about different things that are changing that may give you a heads up where you can get into some of these moves prior to these reports or these moves taking place, and what is triggering this. Am I a fundamental trader? No, I'm not a fundamental trader. I'm a chart trader, and I teach you some of the patterns to look out for, and it's easy. Well, do I just get in? No, because if you just get in, sometimes you'll be able to stick, but I try to teach you guys how to do it, and it is very rare that I'll go in and put in a trade, whether I'm trading 20 contracts of soybeans or corn or whatever I'm trading, and risk more than $100 per contract. My objective is to get to break even as soon as possible and then ride it out. And I'll show you how to ride it out and what to do and how to trade these things. Is that real life stuff? Yep, that's real life stuff, guys. I've been doing this for 30 years, and that's what these guys showed me. That's what they were showing me back years ago, and it hasn't changed in over 30 years on different scenarios that we work with. Now, what is the holiday trade? Why does it continue to work? How do you identify these when you make a trade? Those are what we cover, like I said, in our live trading room. Oh, my link in here is Trade-A-Thon/easy. If y'all could change that, Yana, it was giving me the wrong one. Trade-A-Thon/easy if y'all would like to sign up for that. It would give you time in our live trading room. It'll give you my webinar that I'm going to be doing I will be spending, usually we factor in maybe a couple of hours. I hadn't been out of one with all the questions and everything in less than 3 hours yet. The market commentary that we have on a day-to-day basis, yeah, that's it. Thank you, Yana. It's Trade-A-Thon.com/easy. And I would love to have you guys come in and take a look at what we're doing, how I'm helping people to just hopefully get their feet on the ground and be able to get a good solid background in their trading so you can start. Now, one of the ways that I do this, and I think it's very important, is I try to teach people, first of all, how to make $50 a day. Now, it sounds crazy, and that's my method of, and I call it my 4-tick trader. Because if you're going to come in here and see a $20,000 move, if you can't get in the market at the right time and stay with it, if you get in and keep getting stopped out, if you get in at the wrong time, it's going to be hard for you to get anything of one of those moves where a market may move $1 or $2 in the grain markets or the ES and the YM. And I trade through the, not through, but I trade the FOMC reports quite often. And as I do that, off of that FOMC report, you know, if I can come in there and make in just a few minutes amount of money that the last one that came out, I think I took, we had a couple of contracts and trading the YM, and that's all I traded that day, and it was a little bit over $1,100, I believe, profit. And I didn't trade but for just a few minutes. But that's some of the setups that I want to teach people in this webinar and teach you how to do it. And people are going, well, if you've been doing this for 30 years, why are you putting on webinars? I do it because I love what I do. I have a passion for what I do, for trading. And when I'm teaching, when I'm telling other people and teaching other people how to trade, and right now I'm being bugged to death by my trading partner, Michael Sullivan, because he was speaking about the link that I've got in the here, that it was the wrong one, but it's the right one now, and he can just leave a message. But that's what I do. We spend the time in there teaching everyone how to work through these things. And I'll go in, this next slide in there is another one off of Apple on December the 24th that I showed in there. There's another one that I teach you guys how to, he won't leave me alone. Let me answer this. This is going to be live. Hey, I got everything taken care of. We're good. Bye. That's a quick phone call. Now, I want to show you guys how you can go in here, and I'm gonna put a chart up here, and this is from last year that I call my Three Sisters trades. Now, if you're trading, this is just something that you can put and apply on a daily basis. If you trade the agricultural market, you can do this. If you're just fixated on corn, you're missing the boat. If you're fixated on, and this happens to be in September, coming in off of a holiday right here, and look, here's a holiday. Why is it a holiday? Because it's a big hole right there. There's no candle in there, so I know there was no trading. Now, off of this, I used my Three Sisters. What's a Three Sisters? This is crazy. Well, my wife has two sisters, and I use this. Sometimes she gets disturbed because I keep doing it over and over again. And the Three Sisters are this. When they're all together, they start talking about decorating their house. They start talking about clothes. And eventually it gets to a point where they go shopping. And when they go shopping, they're all going a pack, like dogs run in pack. Like geese, they fly in formation. When I get my wife and her two sisters together, and now it includes my two daughters. And with them, they run in packs. So it's funny. My daughter has the same sofa in her house that we have. The when they go out and maybe they're looking at something to buy for the house, and one of them buys some type of trinket to put on a mantle or something like that, before long, you're going to go in the house and you're going to see one of the other ones that have the same thing. And the three sisters, they end up doing the same thing. They will buy the same thing. Well, how do I name this trade? It ended up being the three sisters. And what happens? When corn moves, there's times when soybeans tell you it's going to move. How do you know? That's what I'll teach you. Wheat may move prior to soybeans and corn even making a move. I picked up a trade in the corn today of, let me see if it's still up here. And I'll show you in corn, and the only reason I was able to trade it was because of what I saw happen in soybeans. That was the only reason. And it was only a couple of contracts, and it was only for a few cents. And this is it right here. $175 on a couple of contracts. That was my only trade because I had maybe 30 minutes or so, 45 minutes that I could trade. Now, that trade went against me a grand total of, so it would be, the worst it went against me was $50 when I put it on. And I ended up taking $175 profit out of it. I was at break even or a no risk trade. I was trading for free within the first minute of the trade. And then, because I moved my stops down, and the key is this. Once I put the trade on, that trade is basically over. What I'm looking to do at that point is manage it. And that's what I teach you guys how to do off the webinar, is manage these trades. Because believe me, it takes all the guts that you can take when you're up, say, $5,000 on a trade or $10,000 on a trade to stay with it. Because everything inside you will be saying, take profits, take profits, take profits. Get out. Look how much money you've made. And then you're going to get out, and the next thing you know, it's going to be, you're going to be looking at it, and it's going to have moved like those soybeans I showed you. It'll have moved another, say, $5,000 or $10,000. How do you stay with it? That's what I teach you. That's why I don't care. I'll tell you the dates. I'll show you the dates. How do you trade it? How do you stick with it? That's what I teach you to do. How to have staying power to get the advantage of these trades. Now, I did that today. Is that a big move? No. Put $175 down if on this TradeStation account that I've got. I only trade a maximum on this one because this is what I use live in the trading room. I don't trade over 4 contracts. Why? On this account, because the first thing that will happen if I was to go in there and put on, let's say, 20 contracts of corn, I'm going to be trading corn. I'm going to be watching it pretty close, and pretty soon it's going to lock up. On 4 contracts, that's okay. I can deal with it. But if I got 20 contracts on and all of a sudden the market takes off like just like a dog after a cart, then I'm stuck when I'm sitting here and I'm running the trading room, and all of a sudden I've got a trade that's bumped up about every other tick that's moving about $1,000, and I'm stuck and can't get out because my machine's locked up. That's why I don't trade my large accounts on my trading computer that I show everybody, but I trade live off of these 4 contracts. Now I trade my other accounts the same way. Because if I can teach you guys how to make $50 on 1 contract, why can't you make, what happens when you make $50 on 10 contracts? The difference is as you get comfortable in your trading, it's that I will go through the process of showing you guys how to build your account to a point where you just have to be good really at making $50 a day. All you do then is this little number up here in the quantity, you just change it from 1 to 2, and 2 to 3, and 3 to 4, and 4 to 5. But then comes the managing of that trade, where you're risking no more on 2 contracts than you really risk off of 1. You're just risking the same amount as you open the trade up. The key is to get to a point where you can trade for free as quick as possible. Now, I've got 9 minutes and 30 seconds to go, and I can show you guys anything that you have questions. If you'd like to throw out a bunch of questions, different things, I'll show you some of the things that I trade with. I'm not a guy that's big on a lot of indicators. I like my charts clean, simple, and easy to work with. And that's why I show you some of the setups that I use there. Now, this was a trade that we worked with back in September of 2014, September the 6th. This was in corn, and you see the move that it made on September the 6th. And I caught a big hunk of that in a 30-day period. Now, that can change the account real quick. Real quick, when you can catch a move and be able to stay in that move comfortably for a month. That's where you make some big money, and that's where you have that's the account changers. That's the retirement trades that I like to talk to people about. Those are the ones that you get in here and you make just, you can get in there and really change things. That's where you can make a nice living in the market. Here's one, this particular trade in corn in 2011 and October the 3rd. A big solid move that we had right here. Some of these moves. The next one in here I'll show you was a move of over $8,000 in 20 trading days in one corn contract. This was, I think this was coming in, set that move in September. What was this? September 13, I think this particular one was. And this is just, I haven't updated it, but it's still relevant. $8,000 in 20 trading days, would that make a difference in an account? Yeah, well, and I venture to say that this is probably one that y'all have never traded. Big majority of them. I ask people all the time, do you ever traded cows? No. Live cattle, hadn't traded them, ever. Here's a 4,000 move, $4,000 move, November the 27th. What happens around November the 27th? Thanksgiving. Huh, look at the move this thing made. Come in after the holiday and look at the move that it made. Well, I got in there. Now, most people, I had a lot of people in there that struggled because they kept getting in at bad times. I'm showing in the webinar, I'm showing people, I'll show you guys how to get in there at the right time. I would love to have y'all in here with me making the money. And the reason is, it's kind of like the turtle traders. I can teach you exactly what I do, and I can get 20 people in the room and teach every one of you exactly the same. The key is, can you absorb it and trade it? And hopefully I can, because you know I'm not the smartest knife in the drawer by any means. The only thing is, I've been in the drawer a lot longer than most others. And in 30 years of trading, I've picked up some things that I'd like to pass along to you. That's why I keep doing this. $97? Man, that's pretty expensive. No, it's not expensive. Not when you can pull out a trade of $4,000 off of a holiday trade, maybe in cattle. Do I use fundamental or technical analysis? Which one is best for short-term trading? How about long-term trading? Which one is best? A mixture. Sometimes it's good to have fundamental knowledge and technical expertise. I've got the knowledge of the fundamental side of it, and I'm always studying new things to take a look at that may be relevant to trading today. Why? Because it changes. I showed you the chart of what happened in 2008 and how we are now on a level playing field. Now, there's a lot of pit traders from years ago that traded the market for 25 and 30 years, and when it went electronic, those guys that were making millions of dollars a year, they can't trade anymore because their edge has been taken. Their edge has been removed. What holidays do I trade? I look for all of them. I'm showing you, what I'll show you is the relevance of when we should be looking for them, what holidays and what markets that you need to keep your eyes open for. Also, in pre-holiday trading, can you make advantage of it? Yeah. How about post? Yeah. How about right during it? Yeah. There's different ways that you can trade it to take advantage of this, whether it's short-term, long-term, options, ETFs, whatever it may be. Those are the things that I cover. And that's what we'll be covering in this webinar that I do. Now, the question that everybody has to ask along this, you've got to ask yourself these questions, and unless you do, you really don't have a good system that you can trade. What is the expected time frame for your trade when you put it on? Now, don't put on a trade saying, all right, I'm going to scalp this, and it gets up and you've got maybe a couple $100 built in a trade tomorrow, and all of a sudden you go, you know, this scalp, I'm going to keep this thing for the remainder of the day because I think it's going to move really big. All of a sudden, your time frames have changed. And usually what happens after you've been in it for a little bit longer and it moves in your direction, it takes a reversal and then it cleans your plow and you got out and you lost when you had an amount already made that was going to make your day, whether it's 1 contract or 10 contracts. Now, what's the amount of risk that you're willing to assume? We cover that too. I try to help you guys figure out what would be best for you, especially my 4-tick traders. Because what's your profit target? If you told people, hey, I'm going to get in this market tomorrow and my key objective is to make $50. You know, there's a lot of traders out there that don't make $50 a day. But look to see if you're trading a $5,000 account, do the math on it. If you made $50 a day every trading day, and I know, I'm not crazy, I know that's not going to happen, but there are going to be days when you make $100, and there's going to be days where you make $200, and there's going to be days where you lose $100. But if you've got your parameters set right and your objective is $50 a day, and you factor that out, what would your account size? Your account size would double. If you've got a $5,000 account, it would double in a year trading 1 contract. Okay, let's say you get real good at it and the next year you trade 2 contracts and you're making that same $50. What happens to your account? It moves quite nicely based on what you started with $5,000. Now, the key, let me help you find some of the answers to what y'all need to know to learn how to trade or to take your trading to the next level. What we do, and this is wrong here, so let me see if I can change it. Easy. And I'm writing, give me a break. I'm writing with a mouse, right-handed, and I'm left-handed. So look, I am really talented. Yes, that would be kind of look like a 4th grader wrote it. TradeTheSystem.com/easy. I've got a 2-hour webinar, and it goes till you guys get sick of asking me questions, or you go, you know, I'm ready to go to sleep. I'm ready to call it a night. We're going to go. I'll go through the process, the execution, the strategies, dates, websites to take a look at, different things to do, and also answer questions about how building that account, how that can help you. Also, along with it, you get our live trading room. You get the you're in there with me and Mike, my buddy, Michael Sullivan, that we run it every day. And we run it from 8:30, about 8:15 in the morning to 11 o'clock. You get our market commentary, our premium videos that we do every night. Well, you get all that. Well, guys, that's it. I wish I had kept running my mouth too much. So questions, send me questions that you have. Pat at TradeTheSystem.com. If you've got questions, I'll be glad to answer them. Go to TradeTheSystem.com/easy. Sign up, and guys, I hope you do. I'd like to teach you how to make some money.